Everyone, this is Brad Matheny. Today is the 11th of March. It is Tuesday. We're looking at a pretty solid breakdown that's taking place yesterday, and a little bit of stalling today. S&P is at 561. If you look at the E-mini S&P futures, they're tanking right now, probably off of news, but we have to look at this from a conceptualization of how deep will it go before it finds the support. Now, I told you guys, and I got a couple of really great compliments recently, and I got a couple of questions recently about, Brad, you keep saying that it's going to base or it's going to bottom. Yes, I truly do believe that it will base or bottom. And I truly do believe that we're going to be looking at, some type of a move now because of this breakdown that's gone below my original 570 lows, that we're going to be looking at some kind of a move deeper over here into March 21st, 24th, 26th, somewhere around that area. But I do honestly believe that we are going to be looking at some sort of a base. That's the way the market works. I've tried to show you over and over again. In a downtrend, you'll get kind of a base, and you'll get a little pullback. So a downtrend, a little pullback, downtrend, pullback, downtrend, pullback. We haven't really seen that. We've seen aggressive selling to the downside, which really tells me that there was, something back over in this area that, carried this forward. Maybe it's just that the markets are now digesting the Trump news. Maybe it's a little bit of post exuberance, post inauguration exuberance. I don't know, but the aggressiveness of this move to the downside really tells me that we're due for kind of a bounce. And when I say a bounce, I'm thinking the 580, 585 area now is back in play. But we have to look at this from a standpoint of where's that bounce going to happen? How far down did we get? And that's where we use Fibonacci. Another person asked me to do a Fibonacci video. As many of you are aware, I've been kind of busy. I had to get my car fixed. Water pump, thank goodness, caught it before it got out of control. Got all fixed up yesterday. So the last Saturday, Sunday, Monday, I've been taking care of car things and work. But we're right now at a 50% pullback. You can see right here, 0.50, 561.40. We're right here at a 50% pullback. That's a pretty solid pullback, guys, in a trend going all the way back to these August lows. So, I'm really under the belief that the markets are seeking a bottom. And when I tell you guys that, I want you to realize that when I'm telling you that we're, trying to bottom, that we're trying to move into this excess phase peak pattern like this, coming down, maybe moving into a base, what I'm trying to tell you is that we are seeking a bottom. And seeking a bottom does not mean we've got a bottom. It means that we're looking for that support level, which will be our base. I do believe this type of a move higher is the next phase, which is why I'm warning you that, be on the lookout for this type of a setup, this type of a rolling pattern. It may be now that we've hit this 50% pullback that we're going to get that type of a rally pattern. But until we see that change, really, we're going to be kind of stalling. Now we're at 562.16. We're up a little bit today. We're really trying to find some support right here around this 50% level. Do I believe this is a bottom? Well, yeah, until we make new lows, I believe this could be a bottom. Again, I'll say it as clearly as I can. I believe this could be a bottom, partly because we're seeing a huge recovery rally in gold from yesterday's kind of panic selling. Same thing in silver. We've gone ahead and kind of flushed out that move. This is a pretty good flush out to the upside. And remember, back over here on the SPY with the SPY cycle patterns, we're moving into that breakaway trend and then rally phase. So, what we could see today, if we're moving into a counter trend mode or a bottoming mode, we could see a pretty solid breakaway up to here, and then a secondary rally, maybe up like this. So it's possible. I'm not going to tell you that it's going to happen because I don't know that it's going to happen, but we're looking at a breakaway, and a breakaway pattern is either going to try to get above these levels here or below these levels here. So again, we're right in the middle, and it looks, I mean, this is a pretty deep selling. I would be looking for a pullback and then possibly a collapse down into this 545, 550 area. So I want you guys to be aware that, when I've been talking about this base bottom setting up, markets just don't go straight down. There's usually some pretty good pauses in between. Okay. And we can actually kind of measure this pause here from basically here to here as a downtrend, make it 4. And then we can measure from here to here as a downtrend there. There's another 100% measured move. So that puts us right at that 566 level, and we're below that level right now. So we're a little bit extended. We might see this rally back up to 566, 567, and then try to move a little bit higher. So we're a little bit beyond 100% measured move right now in this downtrend, in this wave potentially C, which would be an A, B, C type of move. I think that we could see a base bottom setting here with a nice little bounce. Again, markets are seeking support. I'm not telling you that the bottom is here yet, but it makes sense to me that we're darn close to that low, considering where we're at with some of these trends. And you can see I've drawn this line here. Oddly, how my okay, there we go. That line. Now it's just an arbitrary line. It looks like I drew, but it's right at that low, that 562 low where we were at just now, and I think it could play out along with this yellow level and this 50% level that I've drawn. So pay attention, guys. I think we're pretty darn close to a low here at the 50% level. Okay, the QQQ looking like breakaway as well. Again, you take a look at this. Looks like I've drawn some Fibonacci in here. Let's get rid of that. Get rid of that. Get rid of that. Lot of stuff here on this chart. Let's hold here. Get rid of this. Get rid of that. Get rid of that. Get rid of that. Okay, so here we are starting a new buy anchor leg. And then we're looking over here, starting a new buy anchor leg. And that's really this low that I see setting up here. So here's the base, here's the bottom, potentially. Here's our pullback from basically this low all the way up to this high. We are beyond the 50% level. The 50% level is right over here at this level. And we are already beyond that. We're moving into the 618 level down here off of these lows. You can see here this breakdown, potential rally, potential breakdown into the March lows, maybe coming down into this area. And again, that to me seems extremely logical. A double basing, double bottoming, moving then into some sideways trending over here before we move into the April low and then the May low, possibly coming off of these levels. But we have a whole series of lows coming up, guys, that could come into play, having this market roll through a series of deeper lows. Eventually, we get out here to the July low and then the October low, based on my cycle patterns. And I think we're just going to be rolling through this consolidated phase. Now, I am expecting, again, a kind of a megaphone pattern. So when you get into this, kind of expecting something like this to the downside and something possibly like this on the upside. And so these are the broad megaphone setup that I believe is likely to take place. So as we get into these rallies, we could see when we get into these pauses, we could see some big rallies. So now they could be very sharp before we roll into this rally back up. I want you to be aware that, we're really looking at this broad volatility all the way out here till June, July, August, September. And that's why I've been warning for the past 3, 4 months. It's going to happen. Now that we finally got the breakdown, we're going to start talking about new all time highs here and start talking about what I've been suggesting was going to happen for the past 90 plus days, which is this broad megaphone pattern playing out. Now, I will tell you that, the next phase, just so you know, I keep talking about it. The next phase is this rally. Now, we've come up here, we've hit this peak, we've come down. The next phase is an excess phase peak rally. So we're looking for that rally to really set up. I'm looking for that rally, that pause to set up over the next 5, 6, 7, 8, 9 days. It doesn't have to be long, guys. It just has to be a substantial little flagging formation. If it sets up, great. We know what's coming next. We're going to break down into what would be next, would be the breakdown into consolidation before we break down to an ultimate low. So that's where we're at. Where we get this pause and this pullback into flagging, that's going to set up the low for our excess phase peak flagging formation. That's going to then tell us how deep we could expect to see consolidation, which may be down into these levels. And then we could see how deep we're going to see the ultimate low. So really, it's where we set up this flagging and whether we've already broken into this. Now remember, the price moves through these excess phase peak patterns continually. So it's stair stepping. It goes from one step to another and sets up an excess phase peak. And then it goes from one step to another and sets up an excess phase peak. That's how price works. That's the basic structure of price. So you need to understand that I was telling you back over here, we're going to get a breakdown. We're going to likely get a breakdown unless we take out these highs. We failed at these highs, which meant the breakdown was likely. And look, we had a huge breakdown. So yeah, I have been calling this pretty cleanly. Now we're down here near this low. Now we're looking for support. What's happening is we're seeking support. We're trying to find a bottom. It may come down a bit lower, maybe not. I think that we're damn close to a bottom right now, pardon my language, simply because we're down at the 618 level for the QQQ and down at the 50% level for the SPY. So I think we're moving up into this sideways slide. And I think that that's going to be the next move that's going to surprise people is that we're going to be rolling into a sideways upward trend, maybe for 5, 6, 7, 8, 9 days. And then probably right around March 19th, 20th, 21st, break down very hard into another low. Okay. So now let's come back over here to gold and silver. And we're looking at a crush pattern. Crush pattern right now could be a very big downward day on a breakaway, um, uh, meaning we could see gold move downward. You can see we've had this very solid rally back above flagging. You can see the same thing here. Here's flagging in silver. So we have these, we have these apex levels here. We have the apex levels here. You can see we're dancing right around those apex levels here. Now, flagging in metals, depending on what dollar does, which is at 1039.90, I would suggest that a crush pattern in metals, depending on what the markets do right here, could be a big move. And again, because we're flushing out and because we're in this accumulation phase in metals right here, accumulation in bullish explosive trending, I'm hesitant, but it makes sense to me that we would be looking at a very big potential upside move here, really as a crush pattern, kind of an inverted crush pattern. Now, um, you can see I called this crush pattern bullish off of this pullback. Not bad. This was the daily structures I set up last week. Played out okay, especially off of this rotation here. But now, like I said, we had this move here, which played out a little early. This recovery, I think we got to play this level as, here's 612. I think we got to play this really at this 29.25 level. Anything above that level is likely going to rally hard on a breakaway. And then really we've got to come down here to this 2,900. Anything below that could be a breakaway to the downside, a crush to the downside. I really believe that we're moving in this upward direction. And I think that I'd love to see a crush to the upside here. Don't know if it's going to happen. But, that's what I would like to think is the likely outcome after we've seen this big washout low in the SPY and in the QQQ. I mean, it makes sense to me that metals are going to try to act as an aggressive hedge in the market. And I believe that we're going to not see that. I believe that we are going to potentially see an upward trend here in metals holding this level and trying to rally. So I'm going to leave you there, but I am going to tell you that, this $33 area and this like 32.65 area in silver, as well as the 29, 23, 24 area in gold and 29 level in gold. These are like my breakaway levels. When we stay in this zone, we're staying very close to this apexing level. We're really not trending anywhere in this zone. Same thing here. We're staying very close to this apexing level. We've got to get above this 33, 33.10 area or below this 26.65 area to really break down. Okay. I mean, I know this is 40 cents. It's a big move, but look at the volatility we've got. Look at the apexing, the deep low. And that's why I'm telling you, if we get above this level, 33.10, or below this 22.65, or in gold above this 29.23, 29.25 level, or below this 2900 level, we're going to be looking at some real breakdown potential here or breakaway potential here. So really, there's your breakdown potential. There's your breakaway potential. Now, as far as an excess phase peak pattern, look, guys, okay, we come back over here. We failed. We set this low. We are in a bit of an excess phase peak. You can almost see it coming all the way up. I'm going to try to draw it for you. Coming all the way up here. I'll change the color. Moving back down, setting up a flag, failing, and moving down into this new low, setting up consolidation. Okay. Now, at this point, ladies and gentlemen, we would have to get above this high to continue to move higher. So that means we're really looking at this 29.40 area as a very critical high for gold. We've got to get up above this 29.40 area. Otherwise, we're not going to see it move higher. Okay. It's that simple. If we stay in this consolidation range and we don't get above 29.40, then ultimately gold will roll downward through consolidation and try to set up an ultimate low. So it's very critical right now that if we're going to see an upward move in gold, we have to stay above this level and we have to then try to rally on up above that level here to try to get into a new breakaway phase. And the same thing kind of plays out over here in silver. You can see we've got the same type of an upward flagging mode here. You can actually carry it down a little bit. This looks like it already has set an ultimate low. So I would have to rethink this a little. If this is a decent flag rolling up to here, this is our breakdown into consolidation, flagging into our ultimate low, then at this point, we should be moving through upward trending, trying to get higher. Still, either way, if this is in consolidation, which is how I read this here, because this was not a substantial breakdown. I consider this a substantial breakdown into the consolidation pattern. But we'll see if this was the breakdown here and this is the failed attempt to get away from it, flagging out into the ultimate low, we would be in the same scenario. We would have this ultimate low as our protection level and this ultimate high as our breakaway level, and we would now be in a post ultimate low mode, meaning at this point we failed at this low to set any new lows. We should be coming up to take out this high, which means metals are moving higher. Same thing back over here, ultimate high level, ultimate low level. Given the fact that we're down off this low, we've rejected, climbed all the way up. We've extended through this ultimate low into rejection, back into this area. We're basically making a decision here. Do we want to go up and try to break away, or do we want to turn around and go down and collapse? And I believe that the trend in metals is to the upside. So I think we're going to be expanding upward excessively, is my opinion. Okay, lastly, we come over here to Bitcoin. Got down pretty low yesterday. You can see we're already moving into a fairly solid type of recovery. You can see right here. Now, Bitcoin is very interesting to watch as it kind of correlates with the SPY and the NASDAQ, actually more so with the NASDAQ. But we're building that consolidation base. You can see here right across this low, we're kind of building that consolidation base into this broad consolidation pattern. I think that we're going to continue to consolidate, probably get a good sized bounce right up in here, and that's going to be our little flagging pattern in the SPYs, a good solid bounce. We'll see how it plays out, but probably up into this 86, 87,000 area. And then we will consolidate back out here towards our March 20th low. And remember, that's where we're probably going to get our breakdown here is end of March into April. So that's where the SPY and the QQQ and Bitcoin will likely roll downward into my projected bottom, which is again right here. I was going to show you this, but really let's show you this. Into my projected March 21st through 24th low and bottom. Then we have that April 14th low bottom. We go through a topping pattern. Basically, these are not in order. So we go through a bottom with a peak pattern setting up with strength and breakaway. That's around March or April 14th. Then we get into a topping pattern on the 18th, then a base pattern on the 25th, then a top pattern on the 30th. What does that mean, guys? That means volatile near these lows, potentially near these lows, trending in strength. What do we have here? We have a major bottom on the second and a peak on the second, with disruption happening on the 30th of April. So we got disruption moving into more volatility right after that previous volatility. Then we move into this topping major bottom pattern around the 25th of May and the 6th of June. So we're really looking at, some real volatility. When we get down to it, around here, April 14th, we're looking at some pretty solid volatility. Oops, keep active. And then it just continues out here through May, and the volatility just continues out into these areas. So be aware that, we're going to have a lot of big volatility, in my opinion. What you're seeing here, and someone wrote me about a video I did months ago about projecting price activity out till 2040 something. And again, it's available here on TradingView. You got to look for it. But I projected extreme volatility in 2025 and 2026 and 2027. And yet you can argue that when I made my general predictions about what the markets were going to be doing, maybe I was off by a couple of months, looking out 7, 8, 9, 10 years in the future. But, this volatility that we're getting into is not going to subside. We're going to get into some really extreme volatility, and if you follow me and you follow along, we're looking at that excess phase, that megaphone pattern like I have right here. Crunch this all the way up. Seeing as though we've gotten down into these lows, this is what we're looking at now, guys. We're looking at this potential type of a broadening megaphone pattern into, the June, July lows, which could, literally put, Bitcoin back down into these, because we've already established these lows, could put Bitcoin down into these June, July, August lows around $50,000. So you have to understand that if we do set up a massive low over here, July, August, September, October, we could easily be way down here in the $50,000 area. Okay, so I'm going to let you guys go right now. Remember, we're playing through consolidation. Try to give you an example. We're seeking a bottom. I am going to be quite busy today, but I'm going to try to help you guys out with some updates. I really do think, get rid of all my crazy drawings, I really do think that the markets have set up this base. Remember, the SPY is at 50%, the QQQ is at 61% pullback. I think we've got a pretty solid base here, and we're moving into that consolidation channel, kind of like I tried to draw earlier. So I would urge you guys again to be prepared for a little bit of a bounce before we roll into another low cycle. Okay, that's kind of what I think is really the dominant type of move right now. A little bit of a bounce, maybe not too aggressive, then rolling into a deeper low. Okay, guys, going to go back over here to the SPY and let you guys go. Go get some, guys.